Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar's key support level of 66.5070 is fast approaching as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, jumps to a fresh intraday high around 105.24 following the US Federal Reserve's preferred gauge to determine monetary policy, which showed inflation at a higher than expected level. Friday's report from the US Commerce Department showed that the core data for the Personal Consumer Expenditures, or the PCE, price index rose to 0.6% from December to January, up sharply from 0.2% increase from November to December. On a year-over-year basis, prices rose by 5.4%, up from 5.3% annual increase. Looking ahead to this week, the Australian dollar has to face now the next major data, being the CPI year on year. In light of the pattern, we are very much holding to a bear case after the last 4 consecutive days have been demonstrating very much supply increased the downside pressure, and therefore with the ADX now holding to a stronger bear case. Although the RSI is a little bit oversold, I do anticipate a challenge around that 66.5070 and reassess from there. Moving on to the euro, well, the market sunk rather sharply on Friday and deeper into the red following the personal consumption expenditure index data. In light of the pattern now, I feel that the challenge awaits around 105.25 and reassess. If we see a break beneath there, that would give further scope to the downside and bring in the next challenge, seen roughly around 103. In light of the dollar index rallying to 105 and posting a fresh 7-week high, may actually see the call to 106, which I was viewing last week. That would give further stress across the board, and especially for the euro, as it's weighted to the index at 57.6. The dollar yen, well, the target was reached on Friday. That was at 136. And from the break above there, now gives further scope towards 137 to maybe even higher. Or the broader aspect, I'm looking at 142. But still, the bullish outside engulfing or range day engulfing candle has firmed up the aspect that the market should rally on further, and also keeping an eye on the Bank of Japan's central bank nominee Kazuo Ueda, who will speak on Wednesday. Moving on to sterling, the market is still weighing heavily on the support level, with 119.45 taken out, gives further exposure now to 118 figure 30 and reassess from there. Gold crushes the level of 1,820 and now exposes the next region of 1,786 to 89 as a target, with the trend from the ADX supporting a bear case. The market is likely to push lower. Keep an eye on this RSI. We are a little bit oversold, so it could be a bit of a bumpy journey towards that downside, but nevertheless, the bears are still very much holding since the 4-day trek to the downside has strengthened due to the fact of the break of 1,820. Finishing up with oil, where the market has broken to the top side after clearly punching through the level of 75.5 and now exposes the next region up to about 78, 70 to 90. From there, we may find a little bit of supply coming back into the market, but this choppy pattern is still struggling to hold a trend. As we can see, the broader picture from 72 up to 82, and now we're just churning inside the middle of the range. Nevertheless, the break to the upside on Friday has given further confidence for the bulls to take the challenge higher, and towards 78, 70.90, as mentioned, may find a rejection from there. Well, that wraps it for the start of the morning and also for the start of the week, but please keep an eye out for the intraday report and also the end of the day wrap.